Most people don't realize it, but winter can actually be the best time to buy a home, especially if you're using that amazing VA home loan and all the benefits that come with it. With fewer buyers in the market, motivated sellers, and unique opportunities to negotiate, veterans and military families can get a real edge during the coldest months. So please join us for our live event on why the winter season uh, purchasing a property, you can maximize your VA home loan and make your dream a reality. My name is David Piatek. My background is in mortgage lending. I've been doing it for the last, feels like a gazillion years, but it's been almost, I think, 20 years. And I've been serving in the National Guard for the last 15. Loving it. So thanks for joining us. And I'll let Lourdes introduce herself.
Hi, my name is Lourdes Fernando, and I'm a real estate agent here in the Chicagoland area. And I'm a veteran, and I served 11 years in the Army National Guard. And I'm very excited about this topic today.
Yes. So for people that are coming back to the channel, you know us, and we're always talking about all the different components of the housing market and the VA home loan. But I want to share two things before we go into it that were big announcements that were made today. So one of them is that the National Association of Realtors lawsuit, the court has granted final approval on that based on all the changes that happened in the industry. So I think it's a sign of relief, Lourdes. I think for everyone right now to be like, yes, this piece is done and over. What lies ahead? Now, the second big thing that happened today is that there's been officially new loan limits for conforming loans for 2025 were announced, and it went up from $766,550 to $806,500.
Wow.
Now, where this pro for us is that, we've done a lot of videos around having multiple VA home loans. So let's say a veteran currently has a property and now they want to purchase another property, but a portion of their benefits are locked into the property. This new loan limit helps you basically about $50,000 extra in purchasing power where you don't have to put a down payment. So I think that's huge for the veteran community, and I think overall, Lourdes. And I know there's a lot of exciting stuff we're going to talk about. And before we kind of get started too with all this, last year we really got into doing a lot of live events and videos. And I also purchased a property last year because I listened to myself. I talked so much about, hey, why it's the best time to do it. And it was because a lot of the stuff we're talked about today happened in my case. So, Lourdes, you've been a phenomenal advocate for the veteran community going through this. So talk to me, what is one advantage that buyers have in this market purchasing in the winter? And I would probably caveat in the north, because if you're down in Florida, it's a different market. So let's cover both kind of those dynamics as we go through this.
Yeah. So, anywhere where it's particularly cold in the winter, it's really difficult for individuals to go out there and look at properties. So, you have the snow elements, you have very motivated sellers. Sellers don't want their properties to be sitting, especially vacant over the wintertime, because you have things to worry about like frozen pipes. You have like just so much to worry about during the winter. So, what I've noticed, especially here in the colder parts of the United States, is that people are super, and I say people as in sellers, are super motivated during the winter time. And those buyers that are brave enough to get out there and shop around in the cold are getting really good deals.
Yeah. And what makes people sell homes in the winter time? Like because it doesn't make sense, right? Because you're really not getting the top dollar. Like what events would trigger that?
Yeah, so there's a few things what I see in this area is they're tired of the cold. They want to get out of here, and they start shopping in places like Florida or anywhere that it's like really hot. They go vacation there. I want to be here, so we do see some of that. Also, there's a lot of, I think the cold weather just has a lot to do with it, with a little bit of movement in the springtime here. Any time after March is when a lot more buyers do come out and there's a little bit more activity. But typically the winter months are really slow in these areas, and other areas are very, hot during this time. People want to live there and want to relocate. So that's what we're seeing up here.
So basically, the market's like the weather. If the weather's cold, it's a cold. If the weather's warm, it's warm. And so, like, that's something we've noticed as well, and we've looked this up, is that right now we see less people applying for home loans, just less people in the market overall. And I'll tell you guys a couple things with that. So one, it's nice when it's reduced competition, because guys, if you guys have any questions, um, please make sure you drop them down in the comment section. We'll answer anything that you guys have. We're here for the veteran community. And if you guys have video ideas, please let us know so we can talk about that. So one of the things with this shifting market right now, and let's take out 2021 and 22, because when rates were like, 2% or 2.25%, people were buying no matter what was happening. Right now, everyone's a little bit cautious. We just went through an election cycle, and then people are really waiting until after January to see what the impact is. But what I always tell people is that if you can afford today, then buy today, like literally, like today. Okay. And there's another caveat that I'm going to talk about, is that what most people don't realize, Lourdes, is that if you have a VA disability rating and you want your property tax exemption to kick in for the following year, you really have to close before the 31st of December, which is a small caveat. And probably right now, if you're thinking, oh, I'm going to buy a house, that might be really tough, right? You might be really pushing it. But having lower competition, you're able to get seller credits. Because I remember that last year, I think we told people like, hey, during the winter, we're going to get credits. And a lot of people got seller credits because they had motivated sellers. And what we also see a lot of is estate sales happening, divorce situations, work reloads, and then people saying like, this is it, I'm done, I'm kind of transitioning out of here. But then, that's the flip side. You have other markets, maybe like Florida or Arizona, warmer states, which may see an uptick in that. So now those sellers have an advantage to that, right? So it's kind of it's a leveraged component. But what are some things, Lourdes, that people can do to be able to maximize their bidding process? Because some people will be like, well, right now it's winter, I'm going to go 20% on their asking price. Is that realistic? How should people look at it?
That's a great this is a great topic. So we always revert to the comparables. We do factor in the market. So when I do talk to my sellers, I always say, hey, the winter months, are a little bit slower compared to the summer months, and then we did have this election that did really like put a lot of people kind of like on the fence, right? So I would probably say, it does benefit. Since there's less buyers, there's less competition, less bidding wars, and that ultimately means the more favorable your terms are going to be. Now, I would, go with what you think is going to be a fair offer. The sellers can you can test the level of motivation from the sellers at the end of the day. If they're not there, just it's not always going to happen. People think, now like, hey, they're going to give all this, are they willing to go even lower? So, we always got to remain realistic as far as like what happens. Just because there's not a lot of competition doesn't mean that they're going to give their house away for free either. So that's just one of the things that we do have to, because a motivated buyer is going to come in and typically purchase that property very close to ask if it's reasonably priced. Now, if it's overpriced, then yes, we're going to say, hey, these are the comparables of what happened. So it's just kind of like, you get to pick your poison with that. Definitely reach out to your realtor, see what the comparables are selling for, and then make an offer. This is a great time though to really negotiate those closing cost credits, which is really going to help you, and also repair cost. So if there is something that's not, we're under contract right now with the property. It had pipes that were messed up. We have a furnace that wasn't working, a water heater that wasn't
Oh,
working.
yes.
So they're actually getting that repaired, which in a very competitive market, say in the summer and the spring where everybody's going, there's buyers that are going to take on those repairs. So that is one of the advantages. I want to say, so look at the terms. Maybe the price isn't just the thing. It's also what can be fixed during the winter months, which you're not going to be able to get typically in the summer when there's more competition.
Yeah, definitely. That's a good point. And with that, what you mentioned is that a lot of times during the summertime, people waive a lot of contingencies, which
Mhm.
I am not a fan of because of how many issues we see from home inspections. I mean, I had one client, I think they went through 6 or 7 properties of like going under contract and not going through with it because of how much inspection issues there are.
Yeah.
So those are things that you want to be aware of. And trust me, especially with like some of these rehab work that's done, and Lourdes, you've seen this, is that the outside looks gorgeous, the inside they make it look nice, but and it's hard to see because you can't just blame the finger. And the home inspector is going to come in and really tear that building apart. Not like physically damage it, but they're going to be like, hey, they kept all the old plumbing. Hey, so guess what? Now we have to fix or relay the sewer line, water line, or everything needs to be ripped out and redone. So you just kind of be aware of that. That's why home inspections in general are recommended, but they're not required by the VA, which I think is ironic because the VA has so many standards for you buying a property. So that's something you can keep in the back of your mind. Don't forego paying that money to be able to get that home inspection or get a sewer scope, or getting a thorough termite inspection if you're in an area that has a lot of termites. Those are all going to be factors. Now, let me highlight something that
Mhm.
is a hot topic right now for people. And also one of the reasons that they're waiting is people are hoping that interest rates go down next year.
Yeah.
Okay. And I'll tell you this. I don't want to be quoted right now because it is very difficult to predict what's happening. But for the last like 2 years, we've pretty much been on the nail with it. This is the argument why rates won't drop. One is that demand for mortgages is high. Inventory is limited. So why would interest rates go down? If the opposite was true, where we had a high inventory and not a lot of buyers, then it would be an incentive for them to lower interest rates for you to come in and buy. And I want to point something out. When the Fed rate dropped the Fed funds rate 0.5%, people thought that mortgage rates are going to go crazy down, and now it would open up all these opportunities. But the exact opposite happened, and I want to explain why. The government has the ability to do monetary easing by purchasing mortgage-backed securities and other types of bonds. Okay. So back in 21 or 22, when COVID first started, you guys saw what happened to the economy. It basically crumbled. And so what they did is they stepped in, bought all these bonds up, basically freeing up capital from institutions, investors, and putting that back into the stock market and basically fueling stock prices, historical highs, interest rates historically low, because literally they were borrowing money for free. Today, that doesn't happen. I feel, Lourdes, that if in a high demand market, if the rates were to drop, then the spread of people that can afford properties and people that can't would be even wider, because if rates dropped just an example for a hypothetical, if tomorrow rates dropped to 2.5% again, prices would skyrocket,
Mhm.
because
Mhm.
we've seen this before.
Mhm.
And then the rates would have to normalize at some point. Once those rates normalize, now all of a sudden we even have a bigger gap again of people that that can qualify and can't. And interestingly enough, I did a video on it today that'll be released soon. but Mexico's new president is implementing a new 0% mortgage for up to 1 million homes. So there's no money that they're making. It's about a $30 billion initiative. I believe they're starting next year. I have the article pulled up in front of me, but yes, 0% mortgage rates. I'm sure there's a lot of caveats to do with it, but they're saying it's about 1 million homes they're going to build with this. So I think it's pretty cool. I don't know how that would affect the United States and people doing that, but that's just some food for thought. Here we had a question from somebody today. So Ruth, thank you. For properties that have been long in the market, how hard is it to get previously needed inspections, or do we have to keep paying for them over and over again? So Lourdes, you want to answer that?
Long on market hard, so to get previously. So the inspections are optional. They are highly recommended. And if I were to go take an inspection, say the seller says, hey, the inspection, is already done. You don't know what kind of inspector inspected that property. So that is more so for our knowledge to make sure that we're not going to buy a dud. So we've had inspections. For an example, we had a property and the seller said, hey, yeah, we've already had an inspection on the property. It was under contract before. And I was like, okay, let me see the inspection report. So I see it. I'm like, well, there's so much more stuff wrong with this. What are you talking about? So when we had our list and our inspector go out, he listed so much more actual concerns. Did the
Right.
thermal reading, made sure that there was like no leaks, and there was like all kinds of stuff. So from the agent saying, hey, the inspection was great, and then we have our own inspection, and there was so much wrong with this property. Had we just went with the previous inspection, then we would have been SOL, and that falls on you. And that's really expensive. However, I think it's very important because you are spending thousands of dollars on a property. And last thing that you want to do is step into a property that has all these issues and you don't have the funds to fix it. David, do you have any type of insight on that?
Yeah, that's the tricky part, is that I know it's painful to keep repaying for these home inspections, but it is part of home ownership. It is part of that journey. For some people, it's one and done. They they look at one house, they make an offer on the first house, they get it, and then they close. That happened to me with some land I bought in North Carolina. Like, first place we looked at, we made an offer, got accepted, and we closed. I'm like, okay, well, this is exciting. But for a lot of people, it's a journey, right? It takes, sometimes a year long going through that process. And I'm telling you guys, right now is kind of like that hidden gem. Like, what do you do? And for some people, if they're locked into like, let's say a rental, look at your rental agreement. Maybe there's a chance for you to get out of it. But yeah, I work in some markets, like in Arlington, Virginia, for example, where people go look at homes and they bring a home inspector with them just to look at a house, because it's an open house on a Saturday. And guess what? Final offers are on Sunday. And so you kind of have to work with what you have. So every market's a little bit different, but yeah, thank you for that question. Appreciate it. One other thing I want to talk about with the rates is that at least if you buy now, you can always refinance later. With if you use your VA loan, you could do a interest rate reduction refinance loan, which just, again, that's another great tool. I would say don't get steered away from the VA home loan when it comes to using it. Again, tons of benefits that come with that. Now, Lourdes, when it comes to real estate professionals, and just like lending, not everyone's created equal. What are
Mhm.
some tips that you can give buyers about, like, working with veteran-friendly agents that really understand the nuances of the VA loan and how important that is, and maybe some of your experiences with that?
I would. I think it's very. I think it's very important. If Okay, so back to the inspection. When we walk through properties, I like to instruct my clients like, hey, this is everything that I see wrong during that initial walkthrough. And then when the inspection comes, like, before we submit an offer, say, are you sure you want to like submit an offer on this property? Because, if I could find these things, wait until the inspector finds it. There's a lot of other agents that don't do that. They just walk the property and be like, we're excited to go under contract. And, they don't really do that thorough walkthrough with them. And, and it can be very difficult. So that's one. The other thing is if you're looking to purchase a condo or any type of like outside of a regular deal, it can get really sticky if the agent doesn't understand the VA loan in its entirety. I say that to say because I have a lot of agents saying like, yeah, you can't purchase a condo unless the condo is approved. And that's not true. If it's disapproved, you just have to get a waiver. So, and then these are the reasons why. So it's very important to have a team that thoroughly understands the VA loan process, because you as a consumer are going to get, um, I don't want to say screwed in the end, but you may not be able to use your VA entitlements the way that you should or the way that you could. I always hear, just talking with some of my clients, wait, we could do this. I had no idea. I was told that we couldn't. So having that right team on your side is imperative. It's really, really important, I want to say.
Yeah, for sure. And we definitely notice that when we talk with people, agents or clients. So if you subscribe to the channel, you definitely know a lot more than a lot of other people. So just kind of keep that in mind, because we're always doing videos to educate the veteran community or anybody that's out there really to be able to maximize what they're trying to do. Like Lourdes mentioned, that condo piece is a big one. Doing escrow holdbacks is another big one. I'm not an attorney, but like the thing is like if there's some repairs that need to get done to a property, at times you can actually do those repairs after closing with an escrow holdback, which is huge. So when veterans are like, I've passed up all these homes because I couldn't buy as is. I want you to keep in mind, there could be times where, the property's in real need of help. Okay. But if the property's just outdated and it's functional, you can use the VA home loan to purchase it. Again, tons of benefits with that. And I'll tell you another big thing that you guys should do, and is really make sure that when you're getting qualified for your VA home loan, that you're actually qualified. Now I'm going to explain to you what that means. A lender needs to take a look at your credit report. You need to submit your documents. No matter how much you complain, you have to submit your pay stubs, your bank statements, your tax returns, your W-2s. If you're self-employed, need to submit that. A lender needs to request your certificate of eligibility. Lourdes, we've come across this. There's veterans or people think that they actually qualify for VA, but they don't. Which I think is sad, but like at the same time, like that happens, right? So you want to eliminate those things. Having the right person to work with, you're gonna be able to at least minimize that impact on there. And if you guys want, you can always schedule a call with me. My information is down in the description. We're always happy to help and walk you through that process. There's just a lot of components to this. We did have a question here from somebody. So if I own my home, Freddie, thank you so much for the question. If I own my home, are there VA options for me to refi, or would I have to move? If you currently own your property outright with no mortgage on the property, you can't do a cash out refinance. You won't be able to use a VA loan on your current property. This is a caveat with the loan itself. There has to be an existing mortgage on the property in order for you to refinance and take cash out of it. Now, what you can do is I did a video recently around understanding or the differences between a VA cash out refinance and a home equity line of credit. So you might be in one of those positions where you would want to get a home equity line of credit first. And depending on how much money you need, it also can make sense, right? Because if you need like, 20, 30, 40 grand, 50 grand, it might make more sense to do a HELOC than a brand new VA home loan. And just note that some lenders do also have minimum loan amounts for second mortgage, or if you're getting a mortgage. So that can be a factor within that. But if you've paid off the house and you freed up all your benefits, then you can use the VA home loan again and purchase another property, because you can have technically unlimited VA home loans, but at some point you're going to be capped. So hopefully, Freddie, that answers it. If it doesn't, happy to schedule a call, or if you can schedule a call with me, happy to go over it with you, so we can kind of figure out what we can do. So, Loris, what are some? Let me ask you, what are some techniques that veterans can use to research the market, so they can kind of get ahead of, like, am I really comfortable with it? Like, what are some good resources for veterans?
Yeah, I want to say a real estate agent would be the
Yeah.
best resource. Just that way, you have someone to advocate for you. And I know there's, and we're going to touch the NAR, the NAR update. You'll do that in a second, but I think that it's best to work with an agent that understands the process and can really guide you. Some of the things that I definitely want to make sure is that the budget is there, and that you're not going to overspend. And in certain areas, if it's a little bit colder or a little bit hotter, what is your bills going to look like on a month to month basis, and do you have enough? Like, I remember we purchased over a, was it 4,000 square foot or 3,000 square foot home here in Illinois. We had two furnaces and it was massive and I loved it. But the utility bills were not nice. Let me tell you, like, they were like, whew, they gave me like anxiety, one income, and then our taxes went up. It was just like not the most ideal situation. So I'm gonna go back to like that budget, like truly understanding your budget, utilizing a real estate agent to help you run those numbers. If you don't feel comfortable, you're just browsing, and there's a lot of search engines out there that you can use, the Redfin, the Zillows, things like that, just to get kind of an idea what's out there. And they do have some calculators where you can put the information on if you're using a VA home loan, if you're using this, that, and the other. So there are some resources that you can also use that don't require other people or other type of guidance. So there's that. Another thing you can see when they have open houses, and you can walk into the open houses and just ask, like, hey, what is like a monthly mortgage going to be? But just keep in mind that a lot of those agents that work at open houses are also representing the sellers. So they're going to keep the seller's interest kind of like at bay. So there's a lot of, techniques and strategies that you can use. But my biggest thing I would say is probably talk to a real estate agent who does this and who knows the VA home loan very well, and who asks more about, like, instead of like, oh, what are you pre-approved for, like, what is your budget, what are you trying to do in the near future, and how can we go from there.
That's awesome. Thank you for that, Loris. Because yeah, it's definitely much needed. All right, so I want to go through a couple things with you guys. I'm working out an Excel sheet quickly, so I want to cover what we talked about earlier and the impact that it has for the veteran community, as far as what changes in down payment and everything else that comes with that. So just give me one second here. Uno momento. And then I'm going to share my screen, and then we're going to go through it. Okay. Let me pull my screen up in here to present. And this is going to be talking about the let me pull this up. All right, perfect. My beautiful Excel sheet. So this is gonna help you guys understand what this new loan limit is all about, and really how this works. So this new limit and how it affects you guys. So the one thing is that if you're keeping a current VA home loan, you go back to the old rules. Okay, then there's going to be a max on how much you can borrow. So the new limit is $706,500. If you bought a property underneath this price, this is the way that this program is going to work. So if you originally purchased the property, original entitlement, not what happens afterwards, original entitlement is important here, not your current balance. If the original entitlement's $260,000, you have $546,500 left with your VA home loan. You can use this money to buy a house up to this dollar amount without any down payment. So you, in theory, if you bought 4 $200,000 properties, you can buy all 4 with no money down. As long as you're eligible and qualified, you can do it. There's a lot of things that happen with the VA home loan that are powerful tools. Okay.
Mm-hmm.
Now, what happens? So let's say for some people, let's say they use the property for $350, and so they have some money left. So let me just make the numbers a little bit easier so you have some remaining. We have a comment down from someone. David and his team have been great with me. The biggest hurdle I had out there was finding the agent to work with that wasn't going for a quick deal, but actually do their due diligence. So yeah, thank you for that. And that's what we're always preaching is like, make sure you vet these people. If they sound like used car salesmen, they are used car salesmen. So thank you for that. I appreciate it. Okay. So now looking at this example, right? Like, let's say you're looking at a property that's more than $450,000. Well, this is where the next formula comes into play. So this is the remainder of your entitlement. So let's say you want to purchase a property for $600,000 now, right? But you want to keep your property because you have a ton of equity in it. You have a really low interest rate, and a new prospective buyer can actually help you make a mortgage payment on the new property. Very powerful, and we see it all the time. So, right, so you have the new purchase price, all right? So basically, you need to know the difference, right? So basically, we just take, I'm going to do some quick math here. So basically, the difference is $150,000. Now, you're going to have a down payment of 25% on the difference. So basically, you have to take the 150 times 25%. So basically, in this scenario, if you wanted to buy a property for $600,000 when you have $150,000 remaining, you would have to put a down payment of $37,500. Now, these numbers can change always, right? Hey, you originally purchased the property for $150,000. Then in this case, you would actually have enough money to buy the property without a down payment, right? But the exact opposite happens. Let's say you bought a place for $550,000, and now you have to put even a larger down payment, right? So that's just some simple, quick math. This is like what I use. This is like for dummies because it's just much easier to use, and I can do the numbers really quick. That's why pulling a certificate of eligibility is so important. And another big important thing to note is that if you have a multifamily property, this doesn't change. It's always based on the single family loan limit. So keep that in mind as you go throughout your journey. And another thing to note is that, let me look it up, because I know that the and high limit areas have also gone up. So May 25, let me see if they show that. Yep. So they went up. So this is like in DC, certain parts of California, just like high cost areas. So that limit has gone up to $1,209,750. So let me pull that in here. 102,09750. Oh.
David, what happens if someone buys in California and then they decide to buy here in Chicago? What happens to their $1 million entitlement?
So that's the thing. Depending on where you're at in the county, it's in the country, it's gonna change. So if you're in an area where, let's say you bought a property for the $1.2 million, right? Let me share my screen again so you guys can see what I'm talking about. So let's say you went and bought in California, but if you bought a property for $900,000, you've exhausted your entire entitlement, right? And basically, you just have to do a 25% down payment for the difference. Right. That's kind of like the downside. So in this case, if you went to, let's say, California, or you went to, or certain parts of California or DC, the limit's much higher. So it works in your favor, right? So previously, if you're in the 806 500, in this case you'd have to bring money in, right? But if you bought this same $600,000 or $600,000 property in a high cost area, then you wouldn't have a down payment. So that's how it dynamically changes. And that's the thing I think a lot of people don't realize with that. But again, you really have to look at it from an individual perspective, right? And not everybody wants to be a landlord. Lourdes wants to be a landlord of the world. Okay. I, on the other hand, don't want to deal with people. I already got to deal with enough. But then, but that's everyone's cup of tea is different. This is why real estate is so exciting. And I think a lot of people are on that, like, I know people are sitting on the sideline of, man, I don't like my house, but I got a really good payment. Lourdes, you come across that?
All the time. There's actually two sides to that. So there are people who say, and I just had and it's funny, we actually helped two of our clients that did this, where they purchased their first home and then they purchased their second home. They held on to it and brought a small down payment. So they got their initial starter home, and then they bought their dream home with a very, very minimal down payment. They don't have to pay PMI. Like, it is just like, and they didn't have to touch their 2% ish rates. They left their 2%. One has a 1.75% rate. And this is the beauty of it. They are using the income, because they're going to cash flow over $1,200. It blows my mind. So they're going to, and they have all this equity in that home. So this was their starter home. They use that to help bring down their mortgage. So it is like, now they're, and they just say once interest rates go down, they're going to refinance. So it is amazing for you to be able to do that. And when it goes down, and there's like an additional little space they can rent out down in the basement. So I'm like, man, this is, they're going to have their dream home and pay like less than $2,000. So I think that's really cool.
I know. And one thing to note with that, with your VA disability stuff, make sure you guys are double tapping how it works in that county, city, state.
Yeah.
Every place does it different. I can't stress that enough. We did a whole video on how to find that information. So you guys can check out the channel and take a look on how to find it. And if you haven't filed for disability, I highly encourage you to go online, check it out. If you check out our other live events, we do live streams with a couple folks that teach about VA disability and kind of what's going on in the VA space. So you can definitely stay up to date with what's happening. And that's what our goal is going to be for next year, well, this year into next year, remaining year, is really to cover current trends that are happening within real estate, the mortgage lending side, impact of the VA, and what it has on consumers purchasing, because there's just so many factors that come to home ownership and how it works. Lourdes, do you have anything else to add before we wrap up for the night?
I think I'm good.
You're good. All right. Well, thanks again for everyone that joined us tonight. Really appreciate the support. Make sure you guys hit the like button and share our presentations with fellow veterans and military members. And you guys have a great night, and we'll talk to you guys soon.